Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and joining us now live is Mr. Sanjiv Chadha, the Managing Director and Chief Executive Officer of the Bank of Baroda. Welcome to the show, Mr. Chadha. A wonderful set of numbers, excellent set of numbers, and there's a lot of positive sentiment that's being generated by your fourth quarter performance. Can you take us through some of the highlights and, more importantly, what led to this kind of stellar performance?
So thank you very much. I hope again the line is audible. So I think from our perspective, there are two or three things that have worked very well. First, of course, is growth. I think we are at that point in time of the cycle where you might say, in comparative terms, it is relative growth which becomes very important, and that's where we believe the bank has done well. I think for the past few quarters, we have been doing better than industry growth. This as a whole, our growth has been about 19%. And within that, what we are very happy about is the growth on the retail side, which has been in the range of 28%. What also again is something which is a bit satisfying is the fact that this growth has come from multiple sources. Within retail, it has come from home loans, auto loans, car loans, education loans, all of which again are growing at 20% nearly or better. Also, the proportion of personal loans, which for us was a new product about 2 years back, is when we really started growing it aggressively. That's coming at about 100%, which really is a big plus for margins. The second piece, which I think is important on the asset side, is that corporate, where we were finding it difficult to get the margins and therefore were a bit conservative in terms of growth. Now that's also taking off. It has grown at 13%. Third is the liability side, where the fact that we have kept a very tight lid in terms of discipline, how we price our deposits is something which has helped us in terms of margins. And while doing that, the fact that our deposits have grown at about 15%, I think that's also a source of some satisfaction for us.
Mr. Chada, specifically on the outlook for this year, what can you share with us?
So I would believe that we should have a more moderate growth this year. To some extent, last year's growth was powered by the bounce back post COVID. We'll be in more normal times. So our assessment is that industry growth might be in the region of 12-13%. We, as is what we try to do, we'd want to grow at industry or better. So we are penciling in a growth about 13 to 14% for ourselves. In terms of margins, also the benefit of the lag effect between deposits and advances, that is dissipating. Although our margins did grow by about 16 basis points this quarter, I believe we are towards the end of that period. So our guidance for the full year is that we will be able to protect our margins, which at 3.3%, which was the full year margins for the last year. But if you were to compare the situation in the year ahead to say what has been the average over the last 5, 7 years, I think we have a fairly solid growth momentum, and we should see good growth as we move ahead.
A quick word on the retail loan growth, which is sticking well. What about the corporate loan book? How does it look, the pipeline, more so because of what's happening in the broader economy?
I think as far as the corporate piece is concerned, first, of course, I think the government has played a stellar role in terms of supporting corporate growth. It is the investments by the government in infrastructure, road projects, which has helped a wide range of industry, from cement to steel to construction. But what we have seen now is that there's a broadening of, again, the growth momentum. New industries are joining into that. And a significant segment of growth is coming from the energy transition. So which means that investments in solar plants, in electric vehicles, I think, and as we move ahead, possibly again in terms of green hydrogen, I think all of these should again contribute very handsomely to growth. So I think the growth momentum that we have seen, it is still something which is driven to a large part by the government spending on infrastructure. But in terms of private investment, we are seeing the cycle broaden. What I'd also like to point out is that the private investment cycle is something which is supported by established strong players. So you have a lot of projects which are brownfield. Also, the fact that corporates are deleveraged, it means that a lot of funding is coming from internal accruals. All this augurs well, not only in terms of growth, but also in terms of quality of growth.
Mr. Chadha, what about gross slippages, which have been pretty low for the quarter, and the average for the past 4 quarters is also down? What is the outlook for slippages for FY24?
I think the outlook continues to be very positive, and that's largely driven by the improvement in the corporate credit cycle, which has been in train for the last many quarters. In fact, slippages started trending downwards even as we were coming out of COVID. If we see our slippages and the breakup, I think the only piece where the slippages are still relatively elevated is the MSMEs, where there was a fair bit of pressure post COVID, and particularly on the book which was restructured. I would believe that this book also should be pretty much cycled maybe in the next 2 quarters, and we should see MSME slippages also trend downwards. But for us in particular, the corporate piece and international are about 60% of our total loan book, and that's where slippages have been at historical lows. And I would expect that this should continue to be the case for the next few quarters and in the medium term.
Mr. Chadha, since we are talking about slippages, we understand that your exposure to Go First is somewhere around 1300 crore. What's your own sense of that account?
So I think the normally we don't discuss specific accounts, but in this case, the company has made a filing. So I think the figures are there in the public domain. Uh, our loan is, I think, fairly well collateralized, so we are fairly assured as far as the loan is concerned. Second, I think the airline industry, I think, is picking up momentum. So and there's a fair chance that the airline could probably fly. For the accounts again are possibly something that will improve over the next few months. Having said that, the bank has a policy of being very conservative when it comes to provisioning, which is why you see that our credit costs are low, because we try to anticipate issues that might arise in the future. And taking that conservative viewpoint, we have made a 500 crore provision on this account.
All right, that's pretty important. How do you see interest rates panning out now that we see a moderation of inflation significantly, including parts of food inflation, Mr. Chadha?
So I think we possibly have reached the end of the interest rate cycle and the sequence of interest rate increases that we saw. I would believe that we might have a short plateau, and after that, possibly the central bank might think in terms of reversing again the cycle. That's something to my mind which might be clear in the second half of the year. But as of now, we are penciling in the possibility of a rate cut towards the end of the financial year.
All right, a rate cut towards the end of the financial year. A couple of more questions. One of those has to do with India First Insurance Limited, which is backed by your bank. I understand that approval had come through during March. Can you share with us what is the plan here?
So I think it is really the company which would be evaluating the next course of action, and I think it is for them to possibly give more color. But I can only say that once the approvals are there from the regulator, then as a general proposition, it is market conditions which determine when you go to the market.
Mr. Chadha, you took over the bank, and within months you had the challenge of COVID and all the resulting dislocation. And as you look back at your tenure, how would you describe Bank of Baroda's state, really, its health, to the average viewer with regard to some of the overhang perceptionally that exists for public sector banks?
So I think it's really challenging times which determine very often the future trajectory of. And I think COVID in particular was a watershed. It allowed us the opportunity to look further ahead and to see what kind of investments are required. And I think that is really what is bearing fruit for us. In particular, again, the ability of the bank to leverage what was a strong position in technology to actually having a technological interface with our customers, which is now the primary mode of interacting with them. So Bob World today has got 30 million customers. 5 times as many people use Bob World as compared to those who come to our branches. That has meant that we have been able to grow the business at better than industry while costs have been under tight control. That is what ultimately is behind the margin improvement that you see and the profitability. The second part, again, I think, is the fact that the bank has been able to attract talent from almost every other banking institution to retain talent and to develop that to deliver value to the bank. I think that's something which really has been a source of much satisfaction for us and a source of competitive advantage. The third part, I think, is simply the performance culture that has got embedded in the bank. So I think which is something which you see reflected in the kind of growth numbers that we see. So COVID was really a watershed, and as we emerge from COVID and we emerge into a world of normality, I think the bank can look at the future with some confidence.
All right, and that confidence you have restored to a very great extent, Mr. Chadha. Thank you very much for your time with us today, and all the best for the future.
Thank you, Siddharth.
If you like the video, do like, comment, share and subscribe.